So much for your time. I am Pius Kojobaka. Looking at our stories, the International Monetary Fund and World Bank are projecting that Ghana is likely to end the year missing out on its inflation target. The two institutions forecast the country recording more than 20% inflation rate by the end of 2024. Details in the following report. The Bank of Ghana is looking at an end-of-year inflation band of 13% to 17% by the end of December 2024. However, the World Bank does not think so, based on the numbers in its latest Africa Pulse report. The World Bank, for instance, is projecting that the end-of-year inflation rate will hit 23.2%. Again, the World Bank, in its Africa Pulse report, for instance, argues that looking at the current development in the economy, it might be difficult for the Bank of Ghana to achieve its 2024 target of 17%. The IMF is also forecasting 22.3% end-year inflation for Ghana. One is not sure for now how these projections from these two institutions will influence government's numbers and whether the Bank of Ghana will indeed move to adjust the inflation rate. Again, what could be the impact on Ghana's economy and investor confidence if government goes ahead to revise its numbers, especially at the time that all the rating agencies have moved to upgrade Ghana's credit ratings? Inflation for the month of September reached 21.8%, and in 4 months consistent decline since April this year. On to our lead story for today. The Bank of Africa and ABSA offered the lowest interest rates for households seeking credit from commercial banks ending September this year. That's according to the latest annualized percentage rates put together by the Bank of Ghana. More from George Yafe.
Individuals and households that were looking for loans and hoping to pay back in a year, Bank of Africa was the best place to turn. The bank offered an average rate of 24.18%. This was after it has added all the charges like commitment, processing, insurance and facility fee. The Bank of Africa had advertised 29.31%. However, Bank of Ghana's data showed that it actually went as low as 16%. The rate also covered loans that will be paid back in 3 years. However, for long-term facilities that should be paid back in 5 years, ABSA was the best place to go, as it offered an average interest rate of 24.81%. This did factor charges like commitment, processing, insurance and facility fee. At the published interest rate of 29.31%, ABSA Bank was also charging 29.72%. The annualized percentage rate is the actual charges borrowers pay on loans. It often has the actual cost that is often not publicized by the commercial banks. Bank of Ghana has maintained that the regular publication of these rates should go a long way in reducing the cost of credit in the country.
And I'd like to invite a senior finance lecturer at the University of Ghana Business School, Dr. Benjamin Amwa, to the discussion table. He joins us via Zoom for some conversation on this. Thanks so much, Dr. Amwa, for joining the conversation. Now, what do you make of these findings from the report coming, especially from the Bank of Ghana, and whether it comes to you as a surprise from this very finding, especially when some banks are actually pricing below what they had advertised when it comes to interest rates?
Thank you very much. For market information and for regulatory reasons and for transparency, it is very important that periodically banks, and in this case the Bank of Ghana, will release such information to the market to inform the markets about cost of credit facilities on the average level, so that clients and customers of banks will know where to go for if they have some credit needs. And so it is not so much of a surprise. It is about bringing information to the market and to also bring some transparency into the pricing of loans. But we need to understand that these are more or less indicative rates. So it doesn't mean that if you go to any of these banks, the rate that has been quoted is what you will get if you go for a facility. The bank will do its own assessment and then will likely adjust the rates that we have seen to reflect the borrower's riskiness. in terms of the facility that he or she is requesting for the bank. So it is good for general market scanning, and it is good for comparing prices, and also to bring some transparency into the loan pricing regime.
And when you take a careful look at the report, you see that the Bank of Ghana wanted to use this to stimulate some competition when it comes to the pricing of loans. Do you think that it has been able to do that?
We will need more of such information going forward. In fact, one thing we need to understand is that the APR, the annual percentage return, is the annualized rate of the facility. But what you will actually end up paying is what is called the effective annual rate, where the effective annual rate will now consider the frequency of compounding of payment that the individual will do during the course of the year. So when you are going for the facility, you need to know, am I going to pay every month, every quarter, or every 6 months? The more you pay in terms of the frequency, the more expensive the loan facility will be. So what we are seeing here is not the actual cost of the loan for the borrower.
Okay.
If you want to know the actual cost, you have to estimate what we call the effective annual rate. And that is what will give you the true cost of how much you are going to pay. And in all instances, if the loan is not paid lump sum per annum, but it is paid monthly or every 2 months or every 6 months or every quarter, then the effective annual rate is always higher than the annual percentage rate that we are seeing. So yes, it is good for the market.
All right.
That is the starting point. But if you are going for the facility, your effective annual rate is most likely and is going to be higher than what is being quoted, because that is what you're actually going to pay.
That's fine. So what about using this report to also empower the borrowers? Have we been able to do that?
Yeah, it is good because now if I'm going for a facility, I can scan through the market and know where to start from. If I'm going for a 1-year household facility, I know that this bank from the trend happens to be giving the lowest. So I can start from that bank. But you need to understand that these banks also use relationship. You cannot just walk into a bank that you have no account with and say you are looking for a facility. It doesn't work like that. So you may want to look at the practicality of being able or successful at getting a facility from a bank that you do not necessarily bank with. That is going to be extremely difficult because in many instances, the banks want to have some information on you. They want to have some track record of you in terms of how you have kept your account and how your outgoings and goings are. And so it is not just easy for you to just move from one bank, jump to the next bank, and you have a loan facility. What you rather need to do is, what is my bank charging? And how comparable is my bank to the competing banks? So that will inform your next decision, whether you want to keep to your bank or you may want to, change your bank if you think that it will help you do it.
In a minute, Dr. Moa, what more can the Bank of Ghana do to help reduce the cost of borrowing apart from this publication and, of course, the MPC rate, which definitely isn't the only determinant for reducing cost of borrowing?
Okay, so this is what the central bank must do. See, these rates that the banks are charging, the banks are not charging because they feel like charging it. It is a representation of the overall cost of doing business in the industry, especially when it comes to credit and deposit mobilization. So if BOG can work on reducing the cost of credit in terms of inflation, in terms of interest rates, then it will definitely trigger, because no bank will go and mobilize money at a particular rate and come and give it out at a low rate. The bank will not do that. So if we want to really, really see the rate declining sharply, we need to look at the macro again. Bank of Ghana works with Ministry of Finance. And so they have to make sure that the rates are low enough to drop down and to pull down the rate at which the banks are giving the facility. Because there's no way a bank will give out a credit facility when the MPC rate is around 27. It is going to be extremely difficult.
That's fine.
So they first have to work at it at their end and then to trigger down into the banking sector. And then we, the retail clients, can benefit from it.
We appreciate your thoughts, Dr. Benjamin Amoy, Senior Finance Lecturer at the University of Ghana Business School. Indeed, thank you so much, sir. A while longer within the financial space, because GCB Capital has finally started paying outstanding claims to customers of defunct fund management firm after government released remaining bailout funds to aid this payment. The following Business Desk report has more.
Oil business understands that some payments were made yesterday covering significant claim settlements to customers of these defunct firms. It is coming at a time that two earlier deadlines had not been met. This because GCB Capital had not got the full complement of the bailout funds that government announced earlier this year. The bank didn't want to start the payment and then freeze the process because it hadn't got enough funds. That is why it delayed the process a little bit. The payments are being structured in a way that will see customers receive up to 15% of their outstanding payments, or let's say up to 50,000 Ghana cedis. However, if your amount left is just 20,000 Ghana cedis, then the expectation is that you are going to get everything being paid to you.
Now to one other stories we have following up for you. Crude oil production in Ghana declined for the fourth consecutive year in 2023. This is according to the Public Interest and Accountability Committee, PIAC. PIAC in its report indicated that crude oil production reduced from a high of 71.44 million barrels in 2019 to 48.25 million barrels in 2023. This represents an annual average decline of 9.2%. The committee is convening a technical consultative workshop with all relevant stakeholders to discuss the decline in crude oil production in Ghana and to explore options aimed at identifying solutions to stem the decline. Mark Ajiman is technical manager at PIAC and joins me via Zoom for some conversation on the back of this. Thanks so much, Mr. Ajiman, for joining us on Business Live. First off, I want you to provide me with an overview of the current state of crude oil production in Ghana.
Yeah, thank you, and good evening to your viewers. So we've been producing crude since December 2010, and we started with the Jubilee field. Then in 2016 we add on the 10 field, and in 2017 we added on the Sankofa field. So currently we have 3 producing fields that we get our share, go to the international market, sell, and get our revenue from. And the Jubilee field, we've produced from the Jubilee field for about 13 years now. Yeah, 13 years now. The 10 and Sankofa field are just about 6 years in production. So naturally, you'll expect the Jubilee field, since it's halfway through its production life, to more like start plateauing, more like leveling up, and then it will start declining. But we've realized that the 10 and even the Sankofa field, which is a predominantly gas field, we've been witnessing for the past 4 years decline in production from all 3 producing fields. And this, with regards to PIAC, is a worrying trend. So when we released our 2023 annual report, in fact, the Department of KNUST actually reached out to PIAC that they have also witnessed that trend, and they would like to partner with us as an institution to provide a platform to have a national consultative dialogue in how to arrest this decline trend.
And I'm wondering, Mr. Ajiman, what could be the key factors contributing to the decline in crude oil production?
Yeah, the factors are many, but then I can group them into probably 3 or 4 main factors.
All right.
We have, let's say, regulatory factors where since 2018, we've not signed any petroleum agreement in Ghana. And you know, to sustain an industry, you have to add on instead of take out. That is how you sustain an industry. So you need to attract investment into the industry in order to sustain it. That is how it works.
All right.
Then there have been some regulatory inconsistencies that send bad signals to international oil companies. For instance, since we had our first licensing round in 2018-2019, and for about 4 years now, or 6 years now, 6 years down the line, we are still negotiating for a petroleum agreement to be signed with companies that won bids, that send back signals. Then the issue of ENI and Springfield unitization, where ENI even had to take it to the International Arbitration Court in London, that also sent a negative signal to the international market. Then we also have what we call the government side of things, where the lessons learned from the 2018-2019 licensing round, it looks like we've not actually learned much from that. The reason why most companies actually pulled out of that licensing round was that we presented low quality data, the sizes of blocks were very small, okay, and government, instead of sticking to the default position, opened a back door by engaging in direct negotiation with some companies. And that has not changed until recently that the Petroleum Commission is talking about improving upon the quality of data that we get. Then, my brother, the general investment climate of the country also deters companies from coming in. So these are just the factors.
That's fine. So definitely its impact on the economy, it's cascading and of course obvious to all of us. But are there any global trends or external factors that of course might be influencing Ghana's oil production apart from the ones you've mentioned locally?
Oh yeah, definitely. There are two trends. One benefits us, one is more or less long term, but will not benefit us if we don't do things right now. Now, the first one that benefits us is geopolitical issues. The Russian-Ukraine war, the Israeli-Hamas conflict, that has increased oil prices. Though we are witnessing lower production, but because prices are high in the international market, we are getting more revenue. So, though it's an unfortunate incident, but we are benefiting from that.
All right. So
then the other,
because of time, Mr. Mark Ajiman, because of time, let's quickly run up with this very interview. So, technical consultative workshop is happening, and I want you to throw more light on that for me. Who are the speakers, and what's the end game?
Yeah, sure. So the program is taking place tomorrow and Thursday. We are looking at 350 participants. The partners are GNPC, Ministry of Energy, University, Ghana Gas, Petroleum Commission, and PIAC. And it's divided into three sessions. We have the opening session where everybody who is invited will be present. Then after that, some will leave, and then we have the technical session and continue on Thursday. Then latter part of Thursday, we have the closing session, and it is the aim of issuing a communique, presenting that communique to the Minister for Energy for actions to be taken. So we have speakers, international expert speakers. We have local expert speakers who are going to come and then share insight into how to arrest this decline.
Thank you so much, Mark Ajiman, for your time on Business Live. We appreciate it. This is still Business Live. We are back with more stories. Please stay.